Welcome back to Tip TV Finance. My name's Charlie Burton. Now, the last time I was on the show, I was interviewing an independent trader. Today, however, we've got a market maker, Richard Wilshire. Richard, welcome to the show.
Good morning, Charlie.
And okay, let's get started straight away. What got you into broking? How long ago did you start?
Well, the grey hair is probably a bit of a giveaway, but I've been in the financial markets for over 30 years. I started at a clearing bank, did 17 years there, both sales and trading, and I moved into sort of the broker-dealer retail world at the end of 2000. I did 8 years at IG Index, and I've been at ETX Capital for 7 years now.
Right, okay. And so what got you into the whole financial services world? What was the attraction to you?
Well, it's probably not the sort of career path that people would take these days, but I was playing for a local football club, and some of the senior guys, the more experienced guys, or older guys at the club, were brokers and traders. I didn't really know what that was, but they made it sound very exciting, and they had a sort of aura about them, and I sort of thought I'd like to try and get into that. So I was fortunate enough to get a day's work experience. And I walked into this smoke-filled environment with lots of noise and screaming and shouting, and people with a phone to each ear. Slightly taken aback, but it just had a buzz and an atmosphere, and I thought, well, I'd like to be part of that. So I tried to pursue a career in the industry.
So how did you go about pursuing that career then? Because, like you said, there was people at the football club who were already in there. Did you just ask for some favours, or how did it work?
I did that, but I wrote to every company, the possible sort of broker, dealer, bank, saying that I'd like to get into the trading side of things. Even that, as I say, that I didn't really understand what the trading side of things was. But yeah, I was fortunate enough to be offered a couple of interviews, a couple of jobs at international banks, and accepted one at a reputable company, a well-known name. Thought I was going to go in and immediately be thrown into the lion's den, and I was placed in the mailroom and was delivering people's letters, and had to work. Well, you earned your stripes, so to speak. I had to work my way up the ladder.
And so once you were up the ladder, you were in that smoke-fueled room, as it was at that time.
Yeah.
Inflated egos and all of that was probably around.
Yeah, there were some colourful characters, let's put it that way. Obviously, the world's a lot more PC and compliant these days, and dealing rooms have changed quite dramatically. Yeah. Also, in those days, it was more of a voice service. So the greater automation that we saw since the sort of the turn of the millennium, it wasn't perhaps as prevalent then. So there was a lot of noise, and it just had a buzz about it. There was a vibe that was, it's hard to articulate, but it was just an interesting, slightly scary place to be, but it was also it was good fun and sometimes sort of frightening at the same time. And
so, who were you actually making a market for back then?
Well, I was working for obviously an interbank market maker, so we were making a market to other interbank counterparties, and to large corporate, or large and small corporate customers. The corporate customer base of that particular bank would have a foreign exchange requirement. And as that evolved, some of those corporate customers ran trading rooms, comparable to ours, but we would make a market. There was a healthy risk appetite, shall we say? So you were encouraged to take risk. You were there to try and make some money for the company.
And how did that feel, like on your first week of actually, okay, Richard, here's your desk, here's the phones, start making a market here for some clients?
Terrifying. It was quite a steep learning curve, but you'd been in the environment, and then they didn't just throw you in at the deep end. You had to, as you work you out the ladder, so you sat with people and you were taught the ropes, so to speak. But yeah, once you, as anyone who's ever had a position or a trade on will know, the first time you take a trade, it's quite an experience, and then you get the emotional roller coaster of the making and losing money and all the associated things that go with it.
So it's interesting because a lot of people watching this show are independent retail traders, and so they feel that emotion because they're trading with their own money, pitting themselves against the market, whether they're trading stocks, indices, commodities, whatever it might be. But you still felt those same emotions, even though it wasn't your money. Mind you, it was your job on the line, I guess.
Yeah, exactly. And also, trading is a very emotive business. No one takes a position because they want to get it wrong. Human nature, we like to be successful. We like to get things right. You like to make money. So yeah, you did treat it as if it was your own money. You took it very personally. A loss was also, and as you say, you had the foreboding that your job could possibly be on the line. But there's a pecking order within dealing rooms that you want to make money. Back in those days, I mean, obviously the market's evolved and changed quite dramatically since then. Risk is, since Lehman's in 2008 and that time, where people were risk takers, people are now risk managers. I mean, banks used to have proprietary trading desks that were there purely to take positions and to try and make money, to pick moves in the market. They don't really exist. They almost, by and large, shut down overnight. And so it was deemed that risk, just assuming large amounts of risk, is not the way forward. And you sort of inherit risk and manage that risk accordingly.
Moving on from that then, so you're making the market for your retail customers, a lot of them nowadays. We've got a lot of retail customers sitting here. For those retail customers that do actually struggle, the newer traders, what is it that they do wrong as opposed to the guys who are successful? From you're sitting there on the other side of the fence. So what is it those traders do that is makes them struggle?
Well, as sort of we discussed, it's a very emotional thing, trading, and I think that sometimes they let their emotions cloud their judgment. Sometimes their risk reward can be a little bit skewed. People are prepared to run their losses and snatch at their profits. I think taking a loss is a hard thing to do, because it's almost an admission of failure. You've got it wrong. You've made a decision and you've got it wrong. So no one as humans, we don't like to get things wrong. So I think it's their risk reward can be skewed. If you think about it, if you're taking a 20 pip profit but taking a 40 pip stop loss, you've got to get it right twice as often just to stand still. They
never learn, do they? They're always trying to trade with inverted risk reward.
Well, people do learn, but it can be quite painful at the outset. It's this sort of the education, and that's why I think people should start off sort of relatively slowly, ease their way into the market.
So the flip side is the successful traders are trading with good risk to reward and good risk management, I guess.
Discipline. I think discipline is the key word. You hear it, I'm not the first person, but you hear it a lot. Discipline is key in trading. Don't let your emotions take control. And I think also that the good traders tend to manage their loss situations better than the poorer traders. No one, as I say, no one likes taking a loss, but it's a very difficult thing to do. But once you can do that, draw a line under it and move on, you'll probably find your trading pattern will be better.
Richard, one last question. What do you think, or what advice could you give to a new retail trader just starting out?
Educate yourself, I think. Everyone's different. Find out about your emotions related to having positions. So start off very slowly, in relatively small size. Educate yourself, try and get a feel for the markets, and realise that sometimes things will happen that are beyond your control. Exit strategies as well. A lot of new traders plan their entry into a trade, but don't plan their exit strategy. And they're just as important to exit a trade. That's key. Yeah,
exactly. And you're absolutely right. Most people, all they think about is when they're going to take a trade. They don't think and pre-plan when they're going to exit.
Exactly.
Richard, we're going to have to leave it at that. Richard Wilshire, ETX Capital, thanks ever so much. My name's Charlie Burton. We're out of time already. Trade safely out there. We'll be back after the break.